This is the Imphal station of All India Radio. In our weekly program of English Talk, we have an interview on investment analysis with Oinam Patel Singh. Interviewing him is Kakching Tabam Ritesh Sharma.
We see frequent ads and we have been advised by most people to invest on banks or in any insurance. And moreover, people with a good knowledge of finance, they invest and they have good returns, some don't, and some invest with ignorance. So to clear the doubts about investment, let's get some insights from Mr. Patel. Mr. Patel, thank you for giving us the time to talk about investment.
Thank you so much.
First of all, if you have to describe investment, we mentioned a lot about investment, mutual funds, and etc. So if you have to describe it, how would you describe it?
Yeah, investment is something that your resources you are going to put some kind of assets with an objective that the principal needs to be safety, number one. Number second is that it should get satisfactory returns. So in very common sense, we can say that the principal needs to be safety, number one, secure and safety, and number second is that the person has to get satisfactory returns. Then we can say in a very formal way. In this investment, there should be some kind of steps needs to be taken. That first one is the allocation of resources. How much you're getting, how much you're saving on that, it needs to be allocated to different classes of assets, number one. Number second is that it depends upon the risk appetite of the persons also. As you know that the risk appetite differs from one to one, person to person, according to the person's his income capacity, according to the lifestyle, according to the level of the income what we have. And apart from that, timing of the consumption. This is very, very important, right? And what happens is that somebody wants to get his investment returns within, let's say, 6 months or maybe 1 year or maybe some 5 years or maybe 10 years or maybe even retirement. It could be even for beyond 25 to 30 years. So according to the timing of the consumption, it has to put it across the different classes of the assets.
You said there are various factors involved with this. So if if a common person have to invest his hard-earned money on something, and if he wants to get some interest or some profit at a short period of time, how he can invest and what you suggest about that?
As I mentioned, that it depends upon his goal and objectives of the person, number one. Number second is that the objective of the goal, it could be broken down to three categories. Okay. First one is short term. Short term, we call it, let's say, less than 1 year. Like somebody wants to buy something within, let's say, 6 months or maybe within 1 year, we could put it those things for short term goals. And the second one is the 1 year and above to 5 years. We can call it a medium term of goal. And the third one is the long term goals. Let's say beyond their 5 years, their kind of objectives and goal, we can put it across as a long term goals. But when he put it across as kind of goals, everybody should put in their mind that their investment, their parking their money to some assets, it has to be completely disciplined, number one. Number second is that the person should have the patience, because the things that he has already put it across the investment with a goal that for 5 years, or maybe 10 years, or maybe 1 year. So until and unless he gets his goal or maybe the time frame, he should bear the patience. The third one is the timing. The timing is very, very important. So these three categories, discipline, patience, and a time, it has to be put in the investor's mind.
It's very important that you have mentioned, because a common person doesn't have a thorough knowledge about this. He doesn't know the risks or the problems involved with that. So if a common person or if a working people have to understand the nature of this risk or whatever that is involved, how can we know that?
It's a very nice question. Here it comes the role of financial literacy, right? Literacy is the skill set and a knowledge set of the person that what the resources, whatever he is getting there, where he is supposed to put it across. So we call it as a financial literacy. The role is very, very high. When I talk about it globally for the financial literacy rate is according to the report from S&P, that is Standard & Poor, only 33% out of 100. That means 67%, they are not aware about the diversification. They are not aware about very simple kind of interest. They are not aware about the kind of compounds. So 33% are only literate. That is 67% are not literate. And the Indian context, in India, as you know that 15.7% of the population to home in India. There is 1.3 people, 1.3 billion people are here in India's population. Out of this, by this agency, as I mentioned, S&P, when they give the report that only 24%, they are very, very literate. And apart from that, I could mention that, since we have some kind of project here in Manipur also, we conducted some kind of, financial literacy program, across in the last 1 year, across, very, very premier 30 plus institutions. So along with that, we conducted so many financial education in the last 1 year. But when I talk somebody, who is doctorate, who is engineer, who is a doctor, talk about some kind of, financial terms, people are not that much aware. It seems that we have some kind of misunderstanding in terms of financial debt. Common people, what we understood is that I am well educated. I'm a doctorate, I'm a doctor, I'm an engineer, and the people thinks that he knows about finance. He knows about how the finance works. But in reality, people don't know. But as I told you that in terms of where he should invest, where he can put it across, it should be literate, number one. Number second is that when you walk into the banks, what kind of products you are getting out there? What kind of returns out of that? Let's say, very, very common leading banks are giving, if you put, let's say 100 rupees, 1 year, how much you're getting out of that? They are not aware about how much the interest rate is coming to him out of his 100 rupees for the last 1 year, number one. Number second, FD, fixed deposit. How much return is giving? Nowadays, the fixed deposit is giving, let's say, 6 to 7%, right? And only just 2 days back, there are, reports comes up that in India's, inflation rate. It has to be calculated along with that. The consumer price index. The May CPI rate was 4.58%. The last June was 5%. Suppose if you get returns of, let's say, around 7%, 7% minus 5 rupees, that is the inflation.
Right.
That means you are going to get 2%. Suppose if your income is, according to the tax slab of India right now, let's say 5%, somebody who gets, 2 lakhs and above to 5 lakhs is the 5%. And somebody who gets, 5 lakhs and above to 10 lakhs is 20%. And somebody who gets an income of, let's say, 10 lakhs and above is 30%. Suppose you get, category of this, let's say, 5%, 20%, 30%. This again, the taxable also will be calculated, number one. Number second, at the end of the day, how much you're going to get the real net return, almost negligible. But this idea, most of the people don't know. Because the thing is that money never sleeps, right?
Who can help us on that?
The bankers and the financial industry, they have been working quite long time, more than 10 to 15 years. They have been quite, so definitely they will be helping out. You can consult with these people also. They will give you lots of inputs in terms of how your money will work for you. To let my money work, I should invest to some kind of different classes, different kind of assets. According to my goal and objective, what I put it across that. Let my money also should be work. It has to be consulted with non-people regarding in this profession.
And asset, you mentioned asset. Asset is the talk of the town. People say asset is good. You have to invest on asset everywhere, in the newspaper, in the different media. So how can we relate asset with investment?
Asset is something where you're going to put your hard-earned money, right? In this asset also different classes of asset. I could categorize 3. Number 1 is equity, and number 2 is the debt. Debt is something like the fixed income. And number 3 is that I can put it like ELSS, assets, equity-linked savings schemes. In equity-linked savings scheme, people can put, let's say, 1.5 lakhs according to Indian income tax right now on the ATC, and he can save this 1.5 lakhs. Let's say your income is X amount, right? From this X amount, this 1.5 will be deducted. Then remaining amount will be calculated just for taxable income. So we can use such kind of things also. So in the equity, we can put, let's say, investing to the stock market, the talk of the town, which is very, very popular to metro cities. And apart from that, this one I would definitely would like in Manipur, and the people should learn it. I would like to suggest and I would like to recommend people should know, should learn. We have, let's say, around 75 to 80% of employees, number 1. Number 2, as per the data from the employment exchange, we could get it more than 7.5 to 8 lakhs. And these are only the registered unemployment numbers, right? If we want to increase our socio-economy, I personally would like to recommend and suggest everyone should start investment to equity market. Equity market is something that you are becoming part of ownership of big companies. These companies are giving return in the last 12 months. I'm talking about just for the last 12 months, right? Last 12 months they give 40 to 50% kind of return. So let's say about how many cars have been plying to the important roads of Manipur 10 years back. Now how many cars are there? How many showrooms are there? So I could have good returns, out of that, maybe around, let's say 20%, 30%, 40%.
What do you mean is that instead of putting our money on fixed deposit on banks, we can still invest on these companies?
Exactly, retail. See, the thing is that in Manipur, when I talk in the masses, in the public, there people are not aware about this equity market, right? But when you drive car, when you ride, 2 vehicles, we used to park every day now and then, let's say morning, evening, going to office, coming back from office, we used to park in the petrol pumps. These petrol pumps are run by whom? Oil marketing companies. These companies are making money. Even we are not investing to this company, we are using their products day in, day out. If we know and start investing this company, my money will never be slave. My money will also grow and they will work 24 hours in a day. But the wise people in the world, and even in India, what they do is that how much they're getting out of their salary, out of their income, a portion of that maybe 5%, maybe 10%, 20%, 30%, they put it aside first. They put it for saving and investment, number one. Number second, remaining amount, they used to go for consumption or maybe expenses for the whole month. So the difference is that they used to first save, number one, and invest it. And the second one is that the normal people, what we do is that first we spend all the money. If something is left, we invest. If nothing is left, then we start borrowing.
You mean that we should keep a track of what we are spending, and it's true, and it's good to know that. You mentioned about the 40% and 30% return that we can get it from other companies. So what about the risk involved if we start investing? How can we avoid that?
Risk is, a part of any kind of investment, because this is the uncertainties that to your expectations, right? Let's talk about the equity. So let's say in Indian market, right, is started the kind of benchmarks, the BSE, there's Bombay Stock Exchange, started their record base April 1st, 1979. So they started with a value of 100, right? So after 37 years now, it is 36,000 now. That means 37 years back, the 100 rupees of your value is now becoming 36,000. That means 1 rupee becomes 360 times of returns, number one. Number second, as I was mentioning regarding the inflation, right? People don't talk about much about the inflation, when they talk about, financial matters now. So it has to be involved. The best kind of investment part is equity market. So in the long run, let's say 10 years and above, the risks, what he mentioned, can be mitigated. Recently, our Prime Minister also, he announced that Indian economy will be doubled by 2025. That means in the coming decade is going to be very, very interesting for the Indian citizens. That means all of us are having huge opportunity, in front of us. The matter is that who knows about it, who starts investing, and who takes the benefits out of this. That makes the lots of differences, Ritesh.
Which means that when our economy becomes bigger or gets better, we should also get the benefit. That's what you really mean, right?
Definitely. See, China, when they become the, let's say $5 trillion, they took, let's say, around 4 years only. And when this USA, when they become $5 trillion, to be double of that, they took around, 7 to 8 years. But in India will take, 7 to 8 years. That means in this coming one decade, is going to be very, very interesting. By 2028, the average workforce of India will be 29 years.
Giving things into perspective, the market value, the condition of the market, you already said that equity is best. But still, there are mutual funds, stocks, shares and all. Which one do you prefer as a commoner?
See, in this case, I would mention that different people have different kind of, perspective, and they have different kind of objectives and a goal. It depends upon, person to person. But the thing is that when we start investing and saving, we should choose which asset class beats the inflation. Right. Here it comes the equity. Here it comes the mutual fund. Right? So apart from that, somebody look into the, whether the product or maybe scheme is well regulated by Government of India. It has to be regulated by Government of India, or maybe anybody who represents Government of India, right?
There are so many working people around. And what's the importance of age and years if you have to relate with investment? This
question is very, very important, as you know that when it comes for investment, it's always suggestible and better be advisable that please start as early as possible. Risk completely can be mitigated, number one. Number second is that the person can get whole lot of, huge return in compound interest.
What you mean to say is early bird catches the worm. When do we know that we have to press the panic button on a particular investment? When do we realize that?
In that case, please don't stop, investing, number one. Keep investing, number one. Number second, as I mentioned regarding some recession, some kind of, breakdown in the market, the expert people, what they say is they keep on investing because that is the time that we should, put more money.
Fortune favors the brave.
Cricket matches are not won by taking 1 and 2 runs, right? See, 1 and 2 runs are very, very conventional kind of investment. What do we have? Bank deposits, or maybe fixed deposit, or maybe recurring, or maybe putting my money to the insurance cannot create my wealth. If you want to create your wealth, just like, batsman in the cricket who hits for, 4 runs, 6 runs, like that, you should start, putting in mutual fund, putting in SIP, putting in equity market, then only you can, create your wealth.
So, listeners, it's time to hit sixes and fours like Virat Kohli. Lastly, not the least, we have limited time. I wish we could discuss more. A word of recommendation for the young working class or anybody who really want to invest.
Yeah, for a young working class, I mean, you have long time. Somebody who starts, let's say, around 25, 30 years, who listens right now, you have very, very long, very, very huge opportunities in front of you. For the coming decade, India is going to be very, very big player in global economy. So in this economy that you can be part of that, my suggestion would be, first one is the tech term insurance. Second one is the tech for health insurance. Third and the fourth one, definitely go to equity, go to mutual fund, go to SIP. So go for it if you want to create in terms of crore of rupees, starting from at the age of, let's say, 25, 30 years or maybe 35 years. You can start, putting now onwards, let's say 3,000, 5,000, 10,000, 1 crore, 3 crore, 5 crore will be your reality at the age of 55 years or maybe at the age of 60 years. And please do that.
I really thank you for the pleasant time that you have given us.
I thank everyone for giving an opportunity to speak the thoughts and the knowledge what I have little bit. Thank you so much.
You have just listened to an interview on investment analysis with Oinam Patel Singh. Interviewing him was Kaksin Tabam Ritesh Sharma. That's all we have for today. We will be back again with a new topic next week. Until then, good afternoon.